Tata Capital is coming out with its IPO, which opens on October 6 and closes on October 8. The company is looking to raise about 15,511 crore rupees through this issue. In this video, we are going to value Tata Capital using the free cash flow to equity or FCFE approach. This is the conservative case, where I assume the company's risk-adjusted assets will grow at 10% per year. Let us carefully break down each part of this valuation. We begin with risk-adjusted assets. These represent Tata Capital's loan book after adjusting for risk weights. Currently, the figure is about 170,242 crores. With steady growth at 10%, the loan book expands consistently and reaches around 290,628 crores in the steady state. This assumption is conservative because non-banking finance companies in India can sometimes deliver higher growth rates, but here I prefer to stay on the safe side. Next comes the Tier 1 capital ratio, which measures how much high-quality equity capital the company holds compared to its loan book. Right now, the ratio is 12.8%, and I project it to gradually move up to 14% in steady state. This indicates that Tata Capital will continue to strengthen its capital base over time, which is good for financial stability. Applying this ratio to the loan book gives us the Tier 1 capital or book equity. At present, this stands at about 21,786 crores, and with growth it almost doubles, reaching around 40,688 crores in the steady state. However, as the loan book grows, Tata Capital must also put aside more equity every year to meet RBI requirements. This is shown as the change in regulatory capital. It starts at a few thousand crores in the near term and eventually settles at around 2,303 crores in the steady state. This money is locked as capital and cannot be paid out to shareholders. Now let us move to profitability. I assume the return on equity improves from about 16.8% today to 18% in steady state. Based on this return, net income grows steadily from about 3,655 crores currently to around 8,962 crores in the long run. But remember, part of this income has to be reinvested into regulatory capital. Once we subtract that portion, we get the free cash flow to equity or FCFE, which is the actual cash that can be distributed to shareholders. Under this conservative scenario, FCFE rises gradually and stabilizes at close to 5,975 crores in steady state. To account for value beyond the projection period, I calculate a terminal value of equity using a cost of equity of 11%. This gives a large figure of about 119,496 crores. When we discount all projected cash flows plus the terminal value back to today, the present value of equity works out to around 83,796 crores. Finally, dividing this by the total number of shares outstanding, which is 424.4 crores, we arrive at an intrinsic value per share of about 197. When compared to the IPO upper band price of 326 per share, Tata Capital looks expensive in this conservative case. Now let us move to the base case. We begin with risk-adjusted assets, which represent Tata Capital's loan book after adjusting for risk. At present, this figure is about 170,242 crores. With 15% growth, it increases to around 197,481 crores in the first year, crosses 265,730 crores by year 3, and reaches about 379,021 crores in steady state. Next comes the Tier 1 capital ratio. Today, Tata Capital maintains 12.8%, but I assume it gradually rises and stabilizes at 18%. As a result, the company's Tier 1 capital, or book equity, which is currently 21,786 crores, grows to about 27,327 crores in year 1, 42,301 crores by year 3, and almost 68,224 crores in the steady state. Because the loan book is expanding rapidly, the change in regulatory capital requirement is also much larger here than in the conservative case. In the first year alone, Tata Capital needs to set aside about 5,540 crores. By year 3, this requirement is above 8,200 crores, and in steady state it stabilizes at around 3,862 crores. This money is locked in by regulation and cannot be distributed to shareholders. On the profitability side, I assume the return on equity improves from 16.8% today to 20% in steady state. This drives strong earnings growth. Net income rises from 3,655 crores currently to about 5,782 crores in year 1, 8,512 crores by year 3, and finally 15,154 crores in steady state. After deducting the regulatory capital requirement, we arrive at free cash flow to equity. In year 1, FCFE is about 242 crores, very low because most of the profits go back into regulatory capital. By year 3, it improves to nearly 293 crores, and in fifth year state it strengthens to about 651 crores. To capture the long-term value, I calculate a terminal value of equity using a cost of equity of 11%. This gives a value of about 212,149 crores. Discounting all the projected free cash flows and the terminal value back to today, the present value of equity works out to nearly 127,191 crores. Finally, dividing by the total number of shares outstanding, which is 424.4 crores, we get an intrinsic value per share of about 300. When we compare this with the IPO upper band price of 326, Tata Capital still looks slightly expensive. Now let's move to the optimistic scenario. The company has risk-adjusted assets of about 170,242 crores. With an 18% growth assumption, these assets are projected to rise to around 412,842 crores by the steady state. The Tier 1 capital ratio, which is 12.8% at present, is expected to improve gradually and stabilize at 17%. Accordingly, Tier 1 capital will grow from about 21,787 crores today to 70,183 crores in the steady state. Book equity, it stands at 33,192 crores today and is projected to reach nearly 82,273 crores in the long term. Moving on to profitability, the return on equity ROE is expected to improve from the current 16.8% to 22%. As a result, net income will rise significantly from about 3,655 crores today to nearly 17,075 crores in the steady state. From this, we subtract the investment required in regulatory capital. After accounting for this, we get the free cash flow to equity, FCFE. It starts at just about 305 crores in year 1 and increases steadily to 12,419 crores in the steady state. To capture the value beyond the projection period, we calculate the terminal value of equity, which comes to about 248,371 crores. When we discount all these cash flows back at a cost of equity of 11%, the present value of equity is around 149,807 crores. Now, dividing this by the number of shares outstanding, which is about 424.4 crores, we arrive at a value per share of 353. In our analysis of Tata Capital, we considered 3 different growth scenarios. In the conservative case where risk-adjusted assets were assumed to grow at 10% annually, the intrinsic value per share came out below the IPO upper band price of 326. In the base case with 15% growth, the results were similar. The intrinsic value again fell below the listing price. However, in the optimistic case, the company appears fairly valued, with some upside potential. The key takeaway is that Tata Capital's valuation is sensitive to growth assumptions and capital requirements. If growth remains modest, the stock may look expensive at the IPO price. But if the company can sustain high growth while maintaining profitability, it could justify or even exceed the listing price. And this analysis is purely educational in nature and is not investment advice. I am not a SEBI-registered advisor. Please consult a qualified financial advisor before making any investment decisions.